Okay, so I'm just going to recap what happened to gold prices today. Why did they fall so harshly? Um, okay, so there's a couple of reasons why this massive drop off happened. To begin with, um, the US economy basically maintained a strong pace of growth in the fourth quarter, um, as consumers boosted their spending on goods and services. But obviously, the momentum is slowly slowing down. Um, but nevertheless, there's still um, there's still a decent amount of uh, spending going on goods and services by households in the economy, which is good news for the economy, and obviously uh, it makes it appear that there's nothing to be concerned about, and so there is no need to invest in gold. There's no need for a safe haven asset for now. So that's the first thing. The second thing, the dollar index actually gained a 0.2%. It gained like 0.2% in terms of strength, which obviously makes gold less attractive for holders of other currencies. And of course, gold has a negative relationship with the dollar, as the dollar gains strength, gold prices typically fall, and vice versa. So that's the second reason. The third reason is related to treasury yields, which were also near their session highs, which obviously are impacting negatively gold, um, as you know, is more yielding, more beneficial to own a high interest bond compared to a gold bullion, which has no interest. It doesn't bear any interest. So of course there is that relationship. But also it's important to remember that lower interest rates obviously tend to be beneficial for bullion, because it decreases the opportunity cost of holding the non-yielding asset. But anyways, the yields are still high, and so there is less demand for gold. Um, so that's the reason why the price fell. Also, there was another news that came out, which was related to initial jobless claims. It appears that jobless claims actually fell more than expected, which is signaling that the labor market um, is still tight. It's so that so that was the last piece of news, and that actually caused the price to go up a bit, because obviously if the jobless claims fell more than expected, then that signals that the labor market is tight, and that's not a very positive uh, that's not positive news. That's not a good sign for the economy, and so that obviously prompted investors to start investing in gold again. So there's this every single time a piece of news comes out, like the market, all the agents in the market, they are reacting very quickly, and the market has been moving quite quickly, to be honest, in these couple of days. But besides those economic news, there was obviously um, financial analysis, market analysis reasons why the price of gold fell as well. So as we can see here, this candlesticks. So let's see. So we had falling tree methods again indicating that something it's indicating that the price is going to fall. Is highly likely that it will fall, and it did fall. Then we had the tree outside down bearish, again high reliability, it's bearish, and even the engulfing bearish before that. So when you combine this with the economic news, you end up with this kind of price action in the market. We can see that the drop off in price has been just shocking, from 1948 to 1932, and it's a pretty massive drop off from here to here. But it will be interesting to see what will happen tomorrow, whether the market will correct itself, whether the market will keep falling. We'll see.